All right, today is Wednesday, October 4th, and the 10-year yield is rising to its highest level since 2007. The 30-year mortgage rate heads towards 8%, and stocks are getting hammered. So, is today the day when we will finally see a bottom, or will the sell-off continue? And how does this affect our position? So, welcome to Coffee with Markus and Mark. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. And if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus, and we're real traders who trade live accounts. So therefore, we got a lot of trading experience, and we are showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. If you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And geez, Mark, I mean, stocks just can't catch a break.
You're right, Marcus. Looking at the overall markets, it looked like we're off to a great start today, but then things have fizzled since. The Dow having its worst day since March, I think I heard, and also turning negative for the year after the dip yesterday.
That's where we're at now, down 1% year to date. So much for a recovery. I mean, the S&P is still up for the year, but right now it's single digits, so only 9.5% after being up as much as 18% for the year. And even the Nasdaq now up only 24%. I mean, I think we were up like 34 or 38% in the Nasdaq.
Absolutely. So things are a little rough right now. Where do you think we go from here, Marcus?
Well, I mean, the S&P 500 could find support. We talked about it yesterday at the 200-day moving average, which is right around 4,200. And I mean, we talked about it previously. It's also that round numbers are actually adding as support or resistance in the other way. But here, I mean, everybody thinks maybe this will hold as support. If that support breaks, I don't even know where we go from there. I mean, is this where we are dropping down to 4,000 again?
I mean that if we break through decisively through 4,200, I do think that 4,000 is the level to watch. But I really like 4,200. We're close right now. I like it for the two reasons you mentioned: round number and the 200-day moving average. You also look at those previous highs in 2013 or 2023. I think that this level is solid, not to mention a 50% retracement from those lows in March to the highs in July. I like this level. I think it's solid. Sure, there's weakness, and right now it's all about interest rates. It really is.
Yeah, and it's interesting. It's almost like traders are now finally waking up to what the Fed has been telling us,
Yeah.
that interest rates are here to stay. I mean, we see that right now the 10-year is retracing a little bit, the 2-year is retracing a little bit. But I mean, mortgages are rising now, getting close to 8% for a 30-year mortgage.
Yeah, and you're right. It's not like this news has or things have changed significantly, at least in my opinion. But it's like traders are finally realizing, hey, this is real. And then of course the 10-year yields hitting levels that we haven't seen for a decade plus. That doesn't hurt. But today, I thought there was some really good news coming out, and I'm surprised the markets didn't react more to it.
Yeah, because this week it's all about jobs. And this is where we had the ADP non farm employment change, which came in much lower than expected, which usually is a bad thing. But right now, since the Fed wants to have a softer labor market, it should be a good thing, especially after yesterday. The JOLTS Jobs Report came in much higher than expected, indicating that there's still a very tight labor market. Today markets should be rejoicing, but it kind of just means, all right, all of the reports leading up to the big one on Friday are just like a little, I don't know, a flash fire in a pan. What do you call this?
Pardon me. Yeah, and I think make no doubt about it. Friday is the big report, period. But after we had JOLTS jobs, which basically said that We have 1.5 jobs available for every unemployed person. So there's still jobs out there. That doesn't really help the employment picture, at least from the Fed's perspective, what they want to see. But I thought the ADP number was excellent. 89,000 added. The expectation 154 there. I even saw 160 somewhere else. That's a big difference. And the previous payroll added was 180,000. So that's a substantial change. I also saw that wages at an annual pace were up 5.9%, which actually is the 12th straight monthly decline. So you have this trend of wages falling, at least based on ADP jobs, and that's exactly what the Fed wants to see. So I thought there would be more of a reaction following the reaction that we had to JOLTS jobs.
Yeah. And it's really it's surprising because it's a kind of an upside down world that we are in right now. Because if we, for example, look at gold, so GC1, what is it? GC1, there we go. If you look at the gold futures, we see that gold has been sliding now for, I don't know, the last week, even more, right? I mean, we retraced back from the 2000 levels now back into the 1800 levels here. And I mean, gold, the flight to safety, you would think that with higher interest rates and stocks plummeting down, that there would be a flight to safety. But no, I mean, it's the other way around. If you look at this, the heat map here, we see that right now it's a flight into the Magnificent Seven, which are all tech stocks, right? And especially today, Tesla being up 3.7%, Amazon 1.24%, Google 1.3%, Microsoft 1.2%. And usually we see that with higher interest rates, tech stocks should be hammered, but they're not.
It, it really is weird. And I know that with gold, the drop in gold can be explained by the strong dollar, right? And so you're absolutely right. It's typically the flight to safety when there's worries and concerns, and it's the fight against inflation by having precious metals and gold. But the strong dollar kind of distorts that picture a little bit. But in a market, like you said, interest rates typically impact tech more because of borrowing costs, higher um, rates for future
Yeah.
growth. But gosh, that's not the case. It looks like everybody just wants to buy those seven stocks.
Yeah. And it's really interesting because we also should look at crude oil. So crude oil was the concern earlier this week or last week, right? Because it
Yeah,
rose up to $93 a barrel. Right now, a pretty good drop back to $86 per barrel. I mean, this is where right now it's like, what the heck is going on in the markets? And this is why today I broke out my favorite mug where we say, trade what you see, not what you think. If you're trying to explain this, I mean, we have been trading for a long time. We have seen a lot of stuff in the markets, but right now, there's a little bit all over the place here.
yeah. I have my big happy trading mug just to remind me that trading's fun.
Well, is it really? Let's take a look at some of our open positions. And looking at the open positions, today is a day where it's not too much fun. So, starting off with CSIQ here, our worry child, I mean, with the higher interest rate, it just keeps marching lower. I mean, initially, it looked like it had found a little bit of support right here
Yeah.
at around 25, but right now just keeps sliding.
This one's a rough one, and we talked about the interest rate worry and concern, and it seems like that's snowballing. Um, I mean, I don't even know if crude oil dropping 10% from the highs or 9% from the highs, if there's any impact there, but definitely getting down to levels that we haven't seen since 2020. So I still think that we could be in a decent range between where we're at right now in 25 and kind of stay put there. But right now, this slide continues.
Yeah, Devon Energy, this one that I entered earlier this week, and also this one today with crude oil prices going down. Also, this going down. I sold the, let's just pick another color here, the 45 put that is expiring on Friday, so in 2 days from now. Right now, Devon Energy is trading at 43.94. If we stay below 45, I'll get assigned. I have to buy the shares for $45. I'm okay doing this. It's just surprising that right now everything is sliding, and here today we're down almost 4%. This is a little bit over proportional, but if we take a look at the heat map, we see that pretty much all of the oil and energy are right now massively down. I mean, we see here Oxy down 4%, ExxonMobil down 3.38%, Marathon Petroleum, Phillips, what is PSX? It's Phillips 66. No, yeah, I mean, it's Phillips, whatever. Conoco, that's Conoco Phillips, 3.5%. I mean, we just see that today, the energy sector, which is one of the outperforming sectors this year, is actually down.
Yeah, rough day for energy. Yesterday, rough day for banks. And it's just an interesting market.
It is. NEE, after bouncing back a little bit yesterday, today also down 3%. So, I mean, this is where it's just like every single thing. And then we have PNC. What's PNC doing? Well, let me guess. Down, but only 1/4%. So that's kind of
Yeah,
like, all right, hang in there.
PNC hanging in there. PNC hanging in there. Now, PNC does have earnings coming up on Friday the 13th. That's all we need. No, but also on Monday, not this coming Monday, but the next, shareholders on record will be entitled to another $1.55 dividend. So I
Which
will take that.
which most likely will be us. Absolutely. So
Yes.
we'll take this. All right. Then we have also UPS. So UPS seemed to have found a little bit of a bottom there. I mean, this compared to the others, at least not in free fall anymore, right? So I got assigned at 157.50. You got assigned at 165. Looked good yesterday, a little bit down. So we also need a couple of updates in the market before we can start selling calls. But this is probably the most likely one that we will be able to sell calls against.
Yeah, not too bad there. And then I still have a put on Goldman Sachs.
Right. So GS, Goldman Sachs, they're actually hanging in there, down only
Yeah,
1/3% today. So this is where you sold the which one?
312.50.
312.50. Okay. So
So it's
also, let's see what
down
happens here. Right now
2%.
at
Yeah,
305. Sorry.
yeah. It looks like well, I'm gonna say I'm gonna get assigned on Friday. So I'm happy to own shares at 312.50. I like this. I think we could easily get a pop back up towards 310, 320 ish right now. Taking a hit yesterday, down 4%, but holding up today.
Yeah. So, not much for us to do on a day like today. And this, I mean, we just talked about it before we head into the show. This is one of these days where you just shut down the computer. I mean, you can really stare at the computer all day and the quotes, it won't change, right? I mean, you might as well come back because there's nothing to do. I believe it will take a little bit more for UPS before we can start selling calls here. So, might as well call it a day from trading and focus on something else.
Yeah, and one thing I like to focus on: 28 days, 2 hours, 46 minutes, and 17 seconds away from you sending me a box of ribeyes.
Is that true? Is that really true? Let's see where we are. Oh my gosh, we're back up into the 70s. I mean, what was a couple of days ago? The probabilities were down to 69%. Now they're moving in the other direction again. And these are the probabilities whether Fed will keep rates the same or raise rates. And right now, this is where traders are factoring in only 23.8% probability that the Fed will raise rates at the next meeting, as you said, in 28 days. And right now, it still does look like this. Let's see and wait if this changes after the jobs report.
Yeah, and Marcus, I refreshed. I see 81.4%. Just saying.
Really? No, I see too. Um,
And interesting, but probabilities for future cuts, now it's shifted to a cut in June rather than July. So that's actually what we want to see. But agree. Right now, it's waiting until Friday's jobs report to see if the ADP jobs trend is true for those other job numbers as well, or if it's
Yeah.
because it's not always correlated. So
No.
we'll just have to see.
So in a moment, we'll take a look at what the markets are doing right now, if they have found a bottom. But let us know if this is helpful. And if so, give us a like. And we really appreciate all of the likes here. And with that said, let's see of what's happening in the markets. We're switching back to a 5-minute chart of the S&P 500, where right now it almost feels that it has found a bottom at 4,220, temporarily just shy of the 200-day moving average here. So will it hold, and will we end the day positive? Again, surprising, even though interest rates are higher, the Nasdaq is higher. So the tech stocks are higher. Just super interesting.
I'll take the green.
Hey, either way, we'll be back tomorrow to let you know what's happening here with our positions, what's happening in the markets. If you're enjoying this, give us a like. If you feel that others should watch this video here as well, feel free to share it. And if you're new to the channel, click on subscribe and hit the little notification bell. This way you get notified whenever we go live, which is every day when the markets are open, to let you know of what's happening and what's happening with our positions. All right, we'll see you again tomorrow.
Happy trading, everybody.